We know that the composition scheme is only for small businesses. So the first step is to know whether you are a small business or not, whether you are an eligible bachelor to get married. If you're not, then there's no point in knowing the composition scheme. First of all, to even consider yourself for the composition scheme, you have to be a registered taxpayer. You'll have to register with the GST authority, otherwise composition scheme isn't an option open for you. The form number is GST REG01, where you'll have to make a declaration for availing composition scheme. So a registered business to fall into the category of small business has to comply with two criteria. Criteria number 1, turnover. Criteria number 2, activity. There are layers, that is, if you comply with first criteria, only then you move on to check if you're eligible in the second criteria. If you're not eligible in the first criteria, just stop. You're not allowed to opt for the composition scheme because you're not a small business. So if turnover is checked, then move on to activity. So these are the two hurdles that you'll have to jump across to become an eligible bachelor. The first hurdle, turnover. Under GST tax laws, this turnover is termed as the aggregate turnover. The aggregate turnover of your business in any one financial year should be less than or equal to 50 lakhs. It cannot go beyond 50 lakhs. If it does, then you're not a small business. Now to answer what you're thinking, what exactly is aggregate turnover? It's an aggregate of all the supplies of goods and services of one person under the same PAN and excludes taxes and the value of inward supply. Now this is not an actual definition given under GST law. I've just simplified the definition and put it. Let's check each of the important terms. The first, of course, is what is included in goods and services. Consider all these tins to represent all the goods and services that are included for a person in aggregate turnover. These would include taxable goods, goods on which GST, either CGST, IGST or SGST is levied, or even exempted goods where no tax is levied. Exported goods are also included, as well as interstate goods. Goods that a taxpayer sells to other states should also be included while calculating the turnover to define aggregate turnover of a business. The second terminology is having same PAN. Now this is a big difference from the current tax structure. The indirect taxpayers currently are identified by their separate registration numbers, service tax registration numbers, VAT registration numbers, and so on. But now they will be identified with their PAN. So it's going to be an all India taxation basis rather than individual states. This means that all your businesses under the same PAN would be targeted. Whether it's your business as a furniture dealer in Karnataka, a consultant in Maharashtra, or a fruit vendor in Bihar, all three will come under the purview of composition scheme. So the implication is that if one taxpayer is opting into the composition scheme, then it will have to be followed by all other registered persons under the same PAN number. So your businesses can have different registrations as far as GST is concerned, but if all of them have one single PAN, then composition scheme will have to apply to all of them together. The third thing you have to keep in mind while computing the aggregate turnover is that it excludes taxes. We've already seen what goods and services mean, that they include taxable, exempt, export as well as interstate. Now in any of these amounts, if there are taxes included, whether it's IGST, CGST or SGST, you will have to exclude them while computing aggregate turnover. The last thing you'll have to keep in mind is that the value of inward supplies is also excluded. What is inward supply? In relation to a person, it means any receipt of goods or services, whether by purchase, acquisition, or any other mean, whether it's for any consideration or not, whether you pay for it or not, it's your inward supply. So, in relation to aggregate turnover, it should mean the sales return that you get from your customers. That has to be excluded because the value of goods and services that you supply would probably include only sales return. So exclude value of inward supplies. So that's aggregate turnover for you. Let's summarize it by drawing a formula. Taxable goods or services supplied by you plus exempted goods or services plus exported plus interstate minus all taxes minus inward supply. This is aggregate turnover. And for you to become a small business, be eligible for compensation scheme, this value has to be less than or equal to 50 lakhs in any financial year. So go check your books. Hurry. Whoa, you've noticed you're eligible as far as aggregate turnover goes. You've broken the first hurdle. And now there's only one more hurdle that you have to break, that of activity.